arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take? What percentage of the offshore market? What percentage of this currency market? What percentage of these other markets? And then I add those up and divide by 21 million and you get a price target. We actually recently published a paper on this, doing it for the next 10 years. And where we arrived at a very conservative, I think, basis was at a $1.3 million price target by 2035. Now, my personal view is it'll actually exceed that. But to put that $1.3 million in context, all Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25. And the reason for that is that that market is expanding over time. So a lot of people think like Bitcoin has to match gold to be worth $1 million. Not true, because the gold market has been expanding like 7% a year for the last 15 years.
As Bitcoin surges past $109,000, investors are witnessing not just a price rally, but the dawn of a financial revolution redefining how the world measures value. Matt Hougan, Chief Investment Officer at Bitwise Asset Management and a leading voice in crypto and ETF investing, believes the global economy is undergoing a fundamental shift from a fiat-dominated system to one anchored in hard assets like gold and Bitcoin. With Bitcoin currently trading at $109,493, Hougan explains that for over 5 decades, the US dollar has served as the universal measure of value, but as central banks diversify and fiat confidence wanes, assets are now being revalued through a broader lens. He highlights growing regulatory momentum, citing bipartisan progress on the Clarity Act and the potential creation of a US Bitcoin strategic reserve, both of which could accelerate institutional adoption. Drawing parallels to the early ETF revolution, Hougan predicts that the upcoming generation of financial leaders, digitally native and crypto-aware, will drive Bitcoin's integration into the mainstream financial system. He also argues that the traditional 4-year Bitcoin cycle is fading, replaced by sustained institutional inflows and macroeconomic shifts. According to current projections, Bitcoin's price could reach $120,747 by November 2025 and surpass $163,000 by 2026, paving the way for a potential long-term valuation of $1.3 million by 2035. For Hougan, Bitcoin isn't just a digital asset. It's the new foundation of a post-fiat financial era. As Bitcoin continues its climb toward a post-fiat future, one thing is clear: the digital gold era has only just begun. Share your thoughts in the comments, and don't forget to like, share, and subscribe for more crypto market insights.
The reason that ties into what you've said is we've lived in a fiat-only economy since we went off the gold standard in the 70s. No one remembers that there was this other version of what could happen. And so like the fiat world is sort of water in this analogy. I think what the world is waking up to is that there's a broader context in which assets aren't self-referentially valued, but valued against other things. And they're being revalued against those other things. And I think we're sort of opening up to that world today. So I think that's why people have a hard time reflecting back onto a non-fiat standard, because for 50 plus years, it's been the dollar that's been the measuring stick. And we're in a transition away from that. But no one working professionally remembers when the dollar wasn't the measuring stick. And so changing the measuring stick is a big deal. I'm not saying it's like, game over, we're reverting away from it, but we're starting to see more different types of measuring sticks. And I think that's why many people don't associate with this, because they haven't lived, none of us have lived that experience over the last 50 years. I think it's a big shift. Primary reserve central banks, that just shifted to gold 2 months ago, right? But those 30 years were the only 30 years in history where that was true. Like that was the water experience. It just happens to be the last 30 years. But the other hundreds of years on either direction, backwards and I think forwards, that's not the case. It's actually gold and other standards. So I do think we're sort of evolving in that direction. I think it's misassessed the likelihood of that probability. I'm looking at Polymarket right now. It's saying there's a 28% chance of the Clarity Act being signed into law this year. Now, with the government shutdown, that definitely complicates matter. But absent the shutdown, I think the probability is higher than that. What our reporting and people in Washington tell us is that the conversations are fairly productive, even between Republicans and Democrats, and that there is a pathway to move that forward if the government reopens. So I think that is a potential catalyst for the end of the year. The other one is the one you raised, which is I think the market's expectation is the Bitcoin strategic reserve has basically a 0% chance. And I think that is just wrong. I think it has a very high chance of coming into form with the existing seized Bitcoin, which just expanded recently with the additional seizure we saw. And then I think there's a non-zero chance that sometime in the next year or two, we move forward with actually acquiring Bitcoin for that. I don't think it's the majority chance, but I think it's a non-zero chance. And so as an additional catalyst for the market, I think refactoring around those. Look, since the Trump administration came in, crypto has been disappointed with the speed time and again, but they have delivered on their regulatory and other promises to crypto. And I suspect that both of these things will happen. And I think the market probably has them mismeasured right now. As you know, Brandon, I come from an ETF background. ETFs were the disruptor to mutual funds. And I was in that industry for 20 years and I saw it, which is when I first joined the industry, the people I worked with were 27 years old and they were at junior positions at JP Morgan. And now they're running JP Morgan Asset Management. And that is just a demographic trend that takes over. The same thing is going to happen as well. The people who will be running Goldman Sachs in 10 years will be natively digital. And that just, and as you mentioned, the people controlling wealth will be natively digital. They'll be more open to crypto. They'll see it as an equal part of the financial ecosystem. So I do think that is a long-term demographic trend that is just inevitable. I mean, it's just literally inevitable. I don't think the 4-year cycle will hold. I don't know if we'll get 10 straight years of green candles. That would be great. But I don't think the 4-year cycle will hold. The reason for that is threefold. The first is one of the primary drivers, obviously, was the Bitcoin halving. That statistically becomes half as important every 4 years. So it's just a smaller force than it was when you and I got into crypto many years ago. It was just a much bigger deal. The second is the last two down wicks, 2018 and 2022, were during periods where they were aggressively raising interest rates. As you said, the highest, fastest interest rate increase in history. And if you look forward to 2026, I just don't expect that. I think we're going to see interest rates come down, as we just discussed. So I think that is moving in a different direction. And then the big thing is we just have this institutional capital that's going to move into crypto. I think it has to move into crypto. I think they can't stay at zero. And that's going to take 5 to 10 years. And so, if you look at the average month, there's like $4 or $5 billion of Bitcoin purchases by ETFs. I think that will continue forever. I mean, not quite forever, but for a very long time until these institutions establish their baseline position. And as a result, I think that's just going to overwhelm the 4-year cycle. Do I think there'll be down periods and maybe even down years? Of course. But right now, do I think 2026 will be an up year? I do, because this institutional capital, nothing stops that train. Nothing stops the debasement.
Election year.
As Bitcoin weathers short-term volatility, leading analysts say the digital asset is quietly positioning itself to redefine global reserves, standing shoulder to shoulder with gold in the next era of finance. Matt Hougan reveals that the future of global reserves and corporate treasuries will likely feature a balance between gold and Bitcoin as governments and institutions navigate an evolving financial landscape. While some advocate for the U.S. to sell its gold holdings in favor of digital assets, Hougan argues that the smartest and most stable approach is to hold both, blending historical stability with technological innovation. He predicts that central banks will gradually begin adding Bitcoin exposure to their reserves, diversifying away from fiat dominance to strengthen their financial foundations. On the corporate front, Hougan foresees a new era of Bitcoin treasury differentiation. Companies merely holding Bitcoin, he says, should trade at a discount, whereas those creating yield, leveraging assets strategically, or innovating, like MicroStrategy, deserve premium valuations. His valuation model projects that if Bitcoin captures just 25% of the gold market and a share of other major financial sectors, it could hit $1.3 million by 2035. Despite short-term volatility, Bitcoin's long-term outlook remains bullish. Analysts like Joe Burnett of Unchained project even higher targets, $1.8 million to $2.1 million by 2035, reinforcing Hougan's view that Bitcoin is set to become a cornerstone of the global financial system. Let's get back to the interview.
I understand the very aggressive game theory that would suggest that the US should sell its gold reserves. But against that is sort of the practical, this is a last stop, bulwark against this other world. And I think probably the right answer is both. And I think you're going to see that on the other side of the spectrum as well. I suspect you'll see the gold first sort of central banks adding Bitcoin exposure over time. I think the right answer to that problem is actually to own both assets and from a geopolitical perspective. And so I suspect that they'll do that slowly, but over time. Very interesting on the treasury, on the digital asset treasury side. My view is they've been sort of treated as one class. You're like a Bitcoin treasury company. And I suspect what we're going to see is a lot more differentiation. My own view is that Bitcoin treasury companies should only trade at a premium to their Bitcoin if they're doing something exceptionally hard. If all they're doing is buying Bitcoin and putting it in a box, then my ETF does a better job than that of them because it's liquid and you can always get out at NAV. So if that's all they're doing, they should trade at a discount. But if they're taking that Bitcoin and they're generating a yield on it, or they're taking that Bitcoin and they're doing option overlay strategies, or they have a $70 billion balance sheet like MicroStrategy, and they're offering convertible loans, which is something I can't do, well, then those can add value. And for that, they can trade at a premium. What this means is I suspect you'll see some that are doing hard things trade at premiums and some that aren't doing hard things trade at a discount. And I think an investor, as you approach these, the question to ask is, how hard is it what this company is doing? If it's hard, then maybe. If it's easy, then no. And I think investors will start to make that sort of differentiation. And I would love to do someday is allow individual investors to redeem Bitcoin out of an ETF. I don't think that's impossible, with quotes around the word impossible, but I think it's very hard. And right now it's not allowed. But we will continue to push for that. So it's happening at an institutional level. It's not happening at a retail investor level yet. But I would love to make it happen if we could. I think about all the different markets Bitcoin is going after, like all the places where Bitcoin can compete. As an example, it can compete with gold. It can be a digital form of gold, a way of storing value in a digital format versus a physical format, as we discussed. And that's a $25 trillion market. It can be a store of offshore wealth in the same way that like London or Vancouver real estate is a store of offshore wealth. It can be used in a currency format in the way that El Salvador is experimenting with it. It can be used for bulk international transaction settlement. Like I think, for instance, we will likely see in the next handful of years, companies or countries trading oil denominated in Bitcoin. It can be used in an institutional setting as a diversification tool. The way I arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take? What percentage of the offshore market? What percentage of this currency market? What percentage of these other markets? And then I add those up and divide by 21 million and you get a price target. We actually recently published a paper on this, doing it for the next 10 years. And where we arrived at a very conservative, I think, basis was at a $1.3 million price target by 2035. Now, my personal view is it'll actually exceed that. But to put that $1.3 million in context, all Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25. And the reason for that is that market is expanding over time. So a lot of people think like Bitcoin has to match gold to be worth $1 million. Not true, because the gold market has been expanding like 7% a year for the last 15 years if you average it out. If it continues that, it needs to take about a quarter of the market over the next 10 years, add the other pieces up, and you get to $1.3 million. One of the reasons I love Bitcoin so much is you get to make that investment on this digital gold thesis, and you get everything else for free. Like if it becomes an international currency, an international means of settlement, Those are like free options that you get on top of this core store value thesis. I think when you do this, when you break it down into the various pieces, it's hard not to arrive at a very significant price target, which is why even traditional Wall Street has price targets of like $500,000 or $1 million or $3 million, which is you don't see Wall Street putting those sorts of price targets on many assets, but they do on Bitcoin. Because if you do the underlying analysis, that's where you end up.
As global liquidity expands and trust in fiat currencies erodes, Bitcoin is steadily establishing itself as a resilient store of value in the modern financial landscape. Its limited supply, growing institutional adoption, and increasing acceptance among central banks position it as a digital counterpart to gold. The ongoing shift toward hard assets signals a revaluation of money itself, where Bitcoin's decentralized nature offers protection against inflation and monetary debasement. With projections pointing toward valuations exceeding $1 million by 2035, Bitcoin's rise reflects not just investor enthusiasm but a structural realignment of global finance. It stands poised to become a cornerstone of wealth preservation in a world transitioning beyond traditional currency systems. As Bitcoin reshapes the future of global finance, the question remains, are you ready for the digital gold era? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more insights on the evolving world of crypto and finance.